So very welcome, everybody. So we have a presentation from the community today. Kit has been in Tokyo quite frequently pre-pandemic, and we met a few times at the Tokyo FinTech meetup and others. And so it's a great pleasure to actually have him on the other side of the microphone today and talk about the recent East Online Hackathon. And I'll just leave it there and hand it over to you, Kit.
Okay, thanks for the introduction. Welcome to Tokyo FinTech Meetup number 140, everybody. This talk is going to describe a project which was executed during a hackathon named ETH Online. And this is one of many hackathons organized by ETH Global. The hackathons have sponsors, and one of the sponsors is named Superfluid. They make technology for streaming money, and they liked our project so much that they awarded it the most futuristic hack in the hackathon. So in order to describe it, I'm going to first give some context and background. I've been doing hackathons for a few years, even before Corona, and I enjoy them because they keep me up to speed. They're exciting. You join a team. The team has an idea. You're all working together to get that idea implemented. Usually, there's not enough time because the idea is too ambitious. So it gets tight at the end. Sometimes you lose sleep, but it's exciting and enjoyable, and it's always a great learning curve, and you meet people. And these three hackathons on the screen are projects where I dealt with streaming money. The first was the Hack Money Hackathon, where I met a guy from Taiwan. His name is Johnson, and he had an idea. We brainstormed and decided to work together. Another one was HackFS, which is actually sponsored by Protocol Labs, which is the organization behind IPFS. And so they want to work on the decentralized web, and my team continued with our financial solution, but we used NFTs, and we stored those NFTs on IPFS. And the most recent one was in October. That was ETH Online. And to give you an idea of the scale of these events, they're really global. ETH Online had 1,150 hackers in 77 countries across 19 time zones, with 56 sponsoring partners, 160 mentors who are helping out, and it delivered 218 projects. Now, 218 ideas for products or services or new protocols or tools, utilities. These are all implemented by teams of 1 to 5 people. And there's so much going on that it's impossible to keep track. It's a spectacle of innovation. And there are so many projects that they divide them into cohorts. Even within your own cohort, there's too much going on to follow. You have to pick a few favorite projects and just follow them. And at the end, you see what's going on and which projects came forward. Let me talk about the first of those. This was the Hack Money project that I did with Johnson in Taiwan, and we named the project DeFima, which stands for Decentralized Fund Management. And I'm going to describe this flow diagram. There's actors. We have Alice, who's a lender, so she makes a loan, and we have Bob, who's a borrower. He takes a loan. And our project concerned the platform that offers the loans. And what we ended up doing was implementing the loan as an NFT, a non-fungible token. So when Bob borrows the loan, borrows the money, the contract sends an NFT to Alice. And as the interest collects, that interest streams to Alice. So the interest flows into her wallet. Now, there's a variety of reasons that we chose to use an NFT. We could also have done a simple stream, which just goes from address to address or wallet to wallet. But an NFT, one of the advantages, it can be moved. And so Alice could sell the loan to another party. So over time, excuse me, over time, this could become a debt market. And that wasn't our larger thinking. We were looking at how it might scale, where you have multiple investors and multiple funds. And when you have that much money involved, the borrower might become a manager who makes investments in a startup or a protocol. You can see that this diagram starts to look like a venture capital fund or a hedge fund. And we had a more altruistic goal. We were hoping that if this platform was built, then the money would cross the border into real life and become microloans to help out emerging economies. But that was just our imagination. All we implemented was the fund part of it. So in the next project, I worked with a team. We called it Filament Finance. This was HackFS. And to kick this project off, I wrote a user story. And this story was deliberately written to sound like science fiction. In the third decade of the 21st century, the global financial system, blah. I won't read it all. You can read it later if you're interested. But there's a character in the story. It's a woman named Emmy, and she works in a big tech company. And then in the course of the story, she has various adventures which revolve around the app that we wanted to build. And you can read this story to see the details. But at the end of it, she discovers a platform, and she decides to invest some money in a metaverse NFT index. And when she does that, she finds that she's earning interest of 151% a year. This is not fiction. This is real. So if you follow this link in the story, you will find a platform where you can earn interest at this rate. And of course, there are risks associated with it, but that's your decision. And then at the end of the story, Emmy wonders if the startup has any openings for her skill set. She's kind of street smart, kind of cool, and she wonders what the next step will be. This is the presentation that we made for the project, for the submission of the hackathon. So there's a science fiction intro and a problem to solve. There's two assumptions in this whole scenario. One is that employers are paying salaries in cryptocurrency. This is already happening. I know people who are getting paid in cryptocurrency. And the other one is that companies and organizations are accepting crypto payments, which is starting to happen. It's definitely happening in Venezuela. And it's probably going to be happening soon in Miami. Now, I want to talk about the evolution of transactions. And here I'm referring to banking. If I look at my bank account today, I see a lot of recurring payments. There's insurance, there's my internet, electricity, gas, a mortgage, even the bank. The bank charges me a fee every quarter. Well, in the near future, all of these recurring payments are going to be streaming. There's no reason, if you're using cryptocurrency, and here I could be talking about Bitcoin or stable coins or even a central bank currency. When you have that kind of currency, there's no reason to break things into 12 transactions a year. It's tremendous overhead on both sides, the bookkeeping. I have to bookkeep the internet provider every month. You can do one transaction a year. That's efficient. And so this is already reality and not mainstream, but it's not far away. So with this thinking, we moved into the next project, which is the streaming Collateral. And I wrote another user story. This is kind of chapter 2, where Emmy now has a job in the cool startup. And when she signed on for the job, she signed an employment contract, which is a smart contract. It's not on paper. And she signed it with her crypto wallet. And when she did that, the company sent her an NFT. Now, much like the loan in the Hack Money hack, this NFT acts as an anchor for her incoming salary. She keeps it in her hardware wallet. And the dapp that offers the services is what we're building. She has some savings. The savings in the course of the story are locked up in DeFi high yield protocols like the one we saw earlier. And something happens where she needs some money. It was an opportunity that she was waiting for. The story doesn't spell it out, but she doesn't want to pull the money out of savings. So she decides to get a loan from one of these platforms. So here we are with the streaming Collateral presentation. The concept you already know, the user story you've already seen. And now I'm going to illustrate or diagram the user story. Again, we have 3 actors. Here's Emmy with her wallet. This is the cool startup with their wallet. And this is the service, the DeFi dapp, which is on the front end just a website. On the back end, there's the application, and you'll notice that this green dash line is the salary streaming to Emmy's wallet. So she keeps it in her wallet, but then when it comes time to go for a loan, she goes to the DeFi site and she requests a loan. To do this, she fills in a form, she puts in various information, and the dapp analyzes the information, and then it comes back with an offer. It presents the terms and conditions, and it calculates an interest rate. Now, it could be that Emmy frowns at the interest rate because it's 6% or something, but it's only for a while, so she decides to go for it. And she signs the offer. So she signs the offer, again, with her crypto wallet. When that happens, the dapp creates a contract. It deploys a contract onto the blockchain, and this is a smart contract. It's coded, it has conditions and logic, and it reacts to events. And then the dapp funds the contract. So it sends money from the treasury to the contract, which is the principal of the loan for Emmy. Now, this process, it takes a few minutes, it's not instant. it's on the blockchain, so things have to confirm. But if Emmy goes and makes a cup of tea, when she comes back to the computer, it'll be ready. So the next step is Emmy sends her salary anchor to the contract. Now, let me back that up. Here you see her salary streaming into her wallet. She sends the NFT. Now her salary is streaming into the contract. This send initiates the loan. So immediately the contract sends the principal to Emmy. Now, Emmy has her money. She uses it for a down payment or leverage or whatever. That isn't so important. But her salary streams into the contract, and the contract relays her salary to the dapp treasury. Time goes by. At a certain amount, enough salary will have collected to pay off the loan. So when that happens, the contract sends the salary anchor back to Emmy. So again, I'll back it up. Salary going to the contract, sends it back to Emmy. Now the salary is going to Emmy. And the contract settles the loan. It resolves any leftover amount in the contract. And that completes the loan process. So we did a demo, which we're not going to do here because it was highly technical, looking at code and everything. But we used two technologies. One of them is Superfluid, which provides the streaming technology. And in order to handle events, we use something from Chainlink, which makes oracles that they call a keeper. And it was Superfluid that gave us the award, which included $1,500 digital dollars. So the team was happy about that. This is the team. The heavy lifting of the smart contract and backend was done by a Polish guy based in Warsaw. The front end work was a Dutch guy based in Amsterdam. Recently, we've had a woman come on board who does UX and project management. She's Chinese, but based in France. And I did the user story and the PR. So that completes the presentation. There are links in the meetup page to the user story and the original presentation. And that's it. Thanks for your time and attention.